Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, August 3rd. Well, after yesterday's Fitch rating downgrade of US, we are now focusing on ISM Services PMI that came almost as expected. Still above 50 expansion on the services side, with employment still above 50, business activity almost as expected, 57, prices a little bit higher than expected, that's concerning, and new orders also almost at the previous value and as expected. Also, regarding labor market, initially jobless claims came higher than the previous one and as expected, and also continuing jobless claims as expected, 1,700,000, a little bit higher. And this is good news. This is good news because softening of the labor market means that the Fed doesn't need to be as hawkish as before. If we check real quick the probabilities for future interest rate hikes, we can see that we are still pricing in flat, no more hikes until March next year, in which we are starting to cut. That's what analysts and markets are expecting. So if economic data continues coming, cooling down, labor market, softening of the economy, and strong data, also at the same time inflation coming lower, we are in a scenario in which we avoid the hard landing, we achieve the soft landing, and at the same time we beat inflation. And that's the expectation of most of the analysts and also the market. That would be the path to the start cutting rates next year. So that's regarding economic data. Regarding earnings, we all know that Amazon and Apple are going to be huge today after the close. Mostly expected this is going to be huge for consumer discretionary readings. And as of right now, markets are liking the expectations, the outlook, and despite the fact that yesterday we really pushed lower, in this morning analysis that I uploaded earlier, I was saying that this candle was concerning on the Nasdaq, but we had an opportunity to hold this dot line that is last week low, and also this pivot line, because this is the door for the potential downside to the low of the range of this ascending triangle that we broke out on July. So right now the Nasdaq is holding and it's putting a nice bottoming tail at support, and also the S&P is stronger than the Nasdaq. And look at this bouncing of the ascending trend line, bouncing of not even touching this area of support, bouncing after this big red candle yesterday. And overall, in the 30-minute chart, we were quite volatile and quite choppy, but now we are starting to again enter yesterday's value, and pre-market high is right here at 15,500. We are now on the 30-minute chart with 8 minutes to the finish of the candle. On the 30-minute chart, we are pushing pre-market highs, but there's a lot of resistance up here. We might see, if we see a pullback and accepting of value, of yesterday's value, we might see a move towards yesterday's high into the afternoon. But what is sure is that we are finding buyers down here. There was support at this level. If we check the 2-hour chart or even the 4-hour, we can see these levels, this huge push that was accepted. On the daily, it's even more clear. That's what I was expecting. So this is good news. And who is leading? Tesla and Amazon, both more than 1% in the green today. Consumer discretionary is pushing. Also pushing Microsoft with 0.50% on the day. Look at this price action. It was consolidating and is more and more pushing higher. And also Nvidia. So Microsoft and Nvidia with AI momentum, and also Tesla and Amazon for consumer discretionary outlook on earnings. Apple is the only one in the red because I think there's a lot of expectations towards ahead of the earnings after the close. It's not clear if Apple is going to provide good outlook, and it's right here, right below all-time highs, and it's with a nice trend. But it all depends. We have nothing, anything can happen. No one knows what is going to happen. So for now, Nasdaq is moving higher, is pushing pre-market highs. S&P is also with momentum pushing higher, now in the green. Nasdaq is 0.23, not super good, but we had a bad pre-market. So look at this volatility, this huge range bounce of opening print and then retesting high of day and now breaking out. So this is all good, but we have to take also into consideration certain things that happened also today after yesterday's big volatility day. One of the things that I would like to highlight is the pullback on dollar. Look at this trend line. We broke down, we bounced, we reclaimed parity, and we are now rejecting this. But this is the spot. This is the spot in which if we pull back and we find buyers, previous support, now accepting again on this range, this trend line might again be broken out and we might find weakness on the stocks if dollar continues pushing. Dollar is in a nice trend, in a nice push. So we have to really watch the dollar throughout all this week and all these days in the upcoming weeks, because it will affect for sure the stock market. Yields are in the green. The 2-year yield is still consolidating below 4.90, but the 10-year is breaking out. And this is one of the things that is quite concerning, because this affects the inverted yield curve. This is inverted yield curve, the 10-year minus the 2-year. And look at this, the 2-year is not moving, the 10-year is pushing higher and it's inverting the curve. And recession is usually not called until we reach the 0% and revert the inversion. So everything is going to be cool, but when we really start pushing towards zero and not being inverted anymore, that's when things might break. So be really careful, because it's not that bad when we are inverted. It's the fact that we are no longer inverted and we are calling that recession when things usually turn into a bloodbath. Take that into account. Follow the yields, follow the treasuries that are going lower. Look at this. This is quite interesting, because usually treasuries go up when yields are reaching the terminal rate, but this is not longer happening. TLT is minus 2%, and it's honestly quite surprising to find that in the last 4 days, it was minus 5.78%. So if treasuries are not going up, if yields continue higher, maybe the bonds market are still freaking out and they expect higher interest rates, and that's why treasuries are not pushing higher on the outlook of lower interest rates. This is something really interesting that I will be following up for sure in the upcoming videos. High yield corporate bonds are not pushing the same way. This is junk bonds, risk on asset. This is not pushing the same way Nasdaq is trying to push on support. So maybe this is just a bounce. It's not rainbows and unicorns. We have to always look for other markets, leading indicators, and also metals. Gold is still quite weak, honestly. These 3 candles are not good. Copper, Dr. Copper, still rejecting. It's in the middle of the wedge that broke out and got rejected. And remember that copper is very used in all of the spots on the supply chain management. So copper is a worldwide economy indicator of recession or strength. And right now, being that China is not getting as much demand as it was expected, so copper is feeling the pain, and also silver. But gold I mean, metals, we have to watch metals for sure to really assess the outlook and the sentiment of the overall economy. What else? Small caps are bouncing a little bit of 193 and Bitcoin is pushing a little bit, but it's just shopping around, it's just consolidating. I don't think anyone has strong edge in any of these markets. Nasdaq is always trying to push, but I mean, at some point, these kind of candles, this kind of pressure that we saw yesterday, and with the Fitch rating downgrade and all the economic outlook that we are getting, it all depends on tomorrow and the upcoming economic data. Banks are quite in the green, XLF is 0.16, but the elephant in the room yesterday and all these days I've been highlighting this. Energy is ripping. This is crude oil, 2.65% after Saudi Arabia announces again that it will continue cutting production until throughout this September. So months and months of artificially lowering production that imbalances demand, that imbalances production and push higher the prices artificially. They are playing games, they are manipulating the market to really break this huge 81, 82 level. This is going to be huge. Since September last year, it's fighting for this level. And XLE, it's 1.83. Also, look at this level, critical level. And you know what, right? You know that if energy, crude oil, fuel starts getting expensive again, this will affect upcoming CPI readings and inflation. So be really careful. Watch these prices on crude oil and on energy, because during the summer, if it continues higher and higher, the next inflation readings that we get, those are going to uptick for sure. And that will probably destroy a lot of expectations. So be really careful with that. Last look to the Nasdaq, trying to hold pre-market highs at 15,500. So I expect we might see a huge move, but I don't see the fundamental reasoning. So be really careful, because this might be a false breakout, but anything can happen. Anything can happen. You have to really be patient for, I think your opportunities will be with Amazon and Apple after the close, and also tomorrow with unemployment rate and non-farm payrolls. We are expecting less non-farm payrolls and the same unemployment rate, and this will boost the market. That's for sure. You will have plenty of opportunities. So I think that's all from my side. As always, thank you for your time. If you find this video useful, please give it a like, support the channel, subscribe to the channel, because I upload videos every single day for market forecast, market updates, and market recap. I appreciate your time as always. I hope you had a good trading day. It's a very difficult and tricky week. Just be sure that everyone's is trying to do their best. I'm trying to do my best, and I am feeling the pain in some of these moves. Really choppy price action, volatile movements, and a lot of news. So just be patient, manage your risk, and you will get ahead. And thank you. As always, stay safe. Remember that discipline and risk management are key for your success. Let's see how Nasdaq and S&P move towards the close ahead of big earnings. See you tomorrow.